Thanks for joining us for the Executive Series. Today I'm talking to Paul Moore, who is the Chairman and Chief Investment Officer of PM Capital. Paul, great to talk to you.
Thanks, Tom.
Now, you've been in the markets for a long time. You've got quite a track record. 30 years is a long time over which to develop an investment philosophy. How have you refined yours in that time?
Yeah, to be honest, the underlying philosophy of what we do really hasn't changed from day one. It's really about searching the world and looking for those businesses that have been mispriced over the longer term. So that hasn't really changed, the fundamentals. But obviously, a lot's happened over 30 years. A lot of experiences. We've gone from TMT optimism to the pessimism of post-GFC. So there's been a lot of experience to learn from and, as I say, refine how you go about it. But the underlying philosophy of what we do will never change.
So the volatility and the secular moves that we're seeing now, how do you see the interplay between those two things?
Look, to be honest, I think people overplay volatility and stock price movements. The market hasn't changed its characteristics in terms of how it behaves day to day in 30 years or as long as I've been in the industry. And the reality is it's that movement away from underlying business fundamentals or the way it's being priced that actually creates the opportunity for investors. So today is no different. There's some big things going on out there, but it also is providing an opportunity for some genuine long-term investments.
Okay, you talk about some big things going on out there, and necessarily that often means offshore. Why should Australians have a greater focus on investing internationally?
Well, I think first of all, just diversification. The crazy thing is that Australians probably still have 98% of their assets here in Australia. And when you look overseas, one, you get a better breadth of opportunity. There's companies like Visa, Google, these great companies that you get the opportunity to buy. Secondly, we still think the currency's going to be depreciating over the medium to longer term, so you get a bit of help from that.
Even from these levels?
Even from these levels. It's probably more fair for where we are at the moment, but I suspect we've still got some downside over the next 2 to 5 years. And importantly, when you look overseas, you typically find businesses selling 20 to 30% cheaper than similar companies here in Australia. So it's just a better risk-reward opportunity.
Okay, so let's talk about the Global Opportunities Fund. What areas have you been focusing on as far as investments are concerned?
A couple of key areas. We've probably invested over 6 or 7 main themes, but domestic banking around the world is a big theme, and it's really just a replay of what happened in Australia from 1994 to 2014. With higher dividends in Australia, the banks slowly got rewarded for that. And that's now happening overseas, post-GFC. Everyone's focusing on domestic operations, and this year we're starting to see those cash dividends paid out. And basically you can get the equivalent of an Australian bank overseas for probably 30% cheaper, which also means that ultimately your dividend is going to be higher as well. Now, it's going to take, just like Australia, it took a long time for that to be reflected in valuations, so we expect that offshore as well. We've also got a number of themes playing off the back of the post-GFC recovery in the housing markets offshore. Real estate got very depressed in the US, Ireland, Spain, so there's a number of opportunities there. Then we've also got what we call our monopolistic type businesses that you just don't get access to here in Australia. As I mentioned, Visa, a great company, compounds at 10 to 12% year in, year out. Google grows at 20%. And some of the futures exchanges that are benefiting as the activity in markets comes back. And again, they're selling on 18 to 20 times earnings, which for those type of businesses are pretty interesting.
And there's a particular benefit for domestic players buying into those funds at current levels.
Yeah, I guess the interesting anomaly here in Australia at the moment is in a lot of cases you have sort of Australian-based funds that invest in the Australian Stock Exchange selling at a premium to the NTA. We would argue that there's a better risk-reward proposition medium-term offshore, and yet you can buy into the Global Opportunities Fund, PGF, or even our Asian Opportunities Fund, PAF, at a discount to its underlying NTA. So there's not many times you get a free kick in life, but the reality is if you're wanting to invest offshore, you have the opportunity to come in at 90 cents on the dollar or 85 cents on the dollar and arbitrage, the premiums that are being paid here in Australia. And it also ultimately means that the dividends you get or the capital gains you get are magnified. So yeah, we think it's an interesting thing to look at.
Paul, great talking to you today.
Thank you.
And thanks for joining us for the Executive Series.